I think we are witnessing structural macroeconomic changes. The traditional safe haven and risk assets are all moving together, which tells you that something fundamental is shifting in how markets view fiat currencies. Since November 2022, gold tripled. Historically, when gold price is more than double in its currency in a year's time, it signaled that the economic and political order are highly unstable.
Hello guys, and welcome to another episode of Crypto Insights provided to you by Venionaire Capital, the entrepreneurial partner for venture capital and private equity. Today again with me is Igor, our investment director and portfolio manager of the Venionaire Web3 fund. Hello Igor.
Hello Philipp, nice to be here again. Thank you for inviting me.
Very nice to have you again, and this time Igor, it's special. I mean, we have extraordinary times.
Yeah.
We can say we have outstanding market conditions. So Bitcoin just printed a new all-time high over the weekends. And again, yesterday at over $126,200. So Igor, walk us through what's happening.
Well, it's quite remarkable, to be honest. Bitcoin surged over 12% over the past week alone. And this was Bitcoin's, I think, sixth consecutive all-time high this year. What's particularly interesting is that it happened during weekend where there is no institutional capital flowing. So for comparison, gold just had its, I think, 40th or 41st all-time high this year alone. Last Friday, it was, I think, around 3,950 or 45, if I'm not mistaken. And yesterday, it hit 4,000. So silver is also up, I think, over 65% in 2025 alone. So markets are truly a bit crazy, to put it mildly.
I would say that's an understatement, Igor. We have multiple asset classes that are hitting all-time highs.
Yes.
What we also covered in the last episode.
Exactly.
What does that tell us about the broader macro picture?
When different asset classes print all-time highs at the same time, it implies that the denominator, for example, USD or Japanese yen, is breaking. This doesn't mean that we have the fact that we have so many all-time highs over all asset classes does not mean economic prosperity. On the contrary, because all asset classes cannot be right at the same time. So when risky assets like crypto and equities, safe haven assets like, for example, gold, silver, real estate and inflation are all rising together, it implies macroeconomic structural changes. The unit of account and store of value of USD or euro or Japanese yen, they're not reflecting market reality anymore. So the markets are signaling that they no longer believe in long-term fiat credibility, where purchasing power diminishes year over year, but in nominal terms, your wealth is rising. Meaning, Bitcoin is after 2 weeks $1 million US. And you think your wealth is growing, but at the same time, you have to pay attention to the diminishing purchasing power. So those are elements that are at the moment strong at play on a global level.
So let's focus on Bitcoin specifically. The ETF flows have been extraordinary, like everything at the moment.
Yes.
What are the numbers telling us?
Well, global ETF flows picked up significantly over the last week. I mean, we have second highest ever for Bitcoin, I think, with 3.55 billion. This indicates strong continuation of flows into October. Digital assets globally attracted almost 6 billion, with the United States leading with 5 billion alone. So it's you have to put it in perspective. Proportionally, it's very, very high. Printing a new weekly record. So it's a new weekly record, what we've had over the past week. US-based Bitcoin ETF flows received 3.24 billion and are actually the driving force behind the current BTC price action. So ETF flows in total reinforce this market momentum, which strengthens the structural support that we see and can expect for a very strong Q4 in USD terms.
So BlackRock's IBIT seems to be the leading charge. What are the dynamics there?
BlackRock's IBIT, for those who do not know, it's a spot Bitcoin ETF in the United States. IBIT has stepped on the gas pedal since 30th of September, 1st of October. So interestingly, Sailor's MicroStrategy or strategy after renaming is currently underperforming. So Sailor hasn't been a strong buyer for some time now. Last week, he bought no Bitcoins, though he still leads worldwide with over, I think, 640,000 accumulated Bitcoins so far.
Yeah.
The current Bitcoin inflows are led by TradFi, Legacy, and boomers buying. This is visible in the relative performance comparison between MicroStrategy and IBIT. If you take a look at chart, you can see clearly that IBIT currently is I would say, better choice for traditional investors, investor groups, and funds. BlackRock's IBIT, or let me put it like this: BlackRock has many ETFs, but IBIT is now its most profitable ETF. It has the highest revenue and currently holds almost $100 billion assets under management. But it is aged at some 450 days. So it's a very young ETF. World's largest ETF comes from Vanguard. It's S&P 500 ETF. This ETF took over 2,000 days, 5.5 years to get to that AUM mark of $100 billion as assets under management. So out of over 4,500 different ETFs available on the market, 18 currently have more than $100 billion assets under management. So, think about it for a moment. Such a young ETF as IBIT has, accomplished that in 450 days.
Yeah,
it's astonishing.
Yeah, it's tremendous.
Also worth noting that U.S. tech stocks recorded some 9.3 billion of weekly inflows over the last week alone. So this is also largest on record. So, the last week overall brought strong capital inflows. And as we've said, it's really crazy out there at the moment.
At the moment, it's really crazy. You mentioned in our last conversation that you were targeting 140 to 150K regarding Bitcoin. Do you still hold to that view, or did something change?
No, I still hold to that. The range of 140K, 150K is my personal expectation, with good chances of Bitcoin getting there until the year's end. What's encouraging is the robust non-institutional demand, even at these currently higher prices, let's say comparatively higher prices. After going back over 123,000 Bitcoin price, and printing the new all-time high over the weekend, we did not see a strong sell-off afterwards, which would imply okay, it's a reversal. It was just a short, brief spike, and we're tumbling down the cliff. It's nothing like that. So this may be a sign that old and large Bitcoin holders either completed their selling or they're holding for a stronger breakout in October and in Q4. Also to mention, Bitcoin deposit balances on centralized exchanges have fallen to a 6-year low, which reinforces this, let's say, scarcity narrative, because this metric is sometimes a good indicator of any current or upcoming sell pressure. If the Bitcoins that are held in self-custody, as it should be, are increasingly transferred to centralized exchanges, deposited to centralized exchanges, it is usually an indication that those that do it are planning to sell their BTC holdings. In this case, we have the opposite. So with increase in demand, we have at the same time very low available balances on centralized exchanges that are seeking to sell.
Now, Bitcoin's market cap is now $2.5 trillion compared to gold's $27 trillion.
Yeah.
So how do you think that relationship is working?
Bitcoin, gold, and silver are all seen as safe haven assets, as I mentioned, especially, of course, in turbulent times. And all three are in the top 10 largest assets in the world after their outstanding performance in 2025 so far. Bitcoin's market cap is almost 11 times smaller than that of gold. So Bitcoin as the global alternative asset has further upside potential, even if that potential is only, let's say, 30% or 40% where we currently stand. It comes at, I would say, at no surprise, given that we have events like the U.S. government shutdown last Wednesday, combined with historically bullish October and Q4 seasonality for risk-on assets. The shutdown isn't helping with existing concerns about U.S. government stability, including the ever-growing national debt situation. I think with 1st October, official numbers were 37.9 trillion, and I think a few months back we have reached this 37 trillion. So we are already almost at 38 trillion. So which I expect, of course, to be breached by the year's end. So golds and Bitcoins roles as safe haven assets appeal, I would say, to an increasing number of investors and asset managers, the vast majority of which come from the United States. So I interpret this as a clear signal of ongoing asset protection strategy against US dollar devaluation.
Okay, then, well, let's switch to Ethereum. There, the ETF inflows are also pretty strong. So how does that picture look like?
Well, Ether spot ETFs have had also very strong net inflows over the past week. I think almost roughly 1.5 billion. Year to date, it's I think 13.6 something, 66 billion, which is roughly 50% of Bitcoin's year to date, which are sitting at some 27.5 billion. But Bitcoin's asset under management are over 195 billion versus Ether's almost roughly 41 billion. So Ether typically lags a bit behind Bitcoin and eventually gets a bigger percentage move. This can inform your allocation decisions with regards to Ether and certain altcoins, favoring I would say altcoin majors over any other altcoin out there. Ecosystem dynamics are also at play. For example, if Ether or Sol thrive, the top projects within their ecosystems are also likely to benefit as well, I would say.
That's an important distinction. So altcoin majors versus the broader altcoin market. Yeah. How should investors now think about this?
Altcoin majors are my preference for solid upside potential. But any altcoin or altcoins that are not back at their August or September highs, I would say need a bit more time. The majority, or let's say of quality altcoins, not every altcoin out there, many have good price technical basis right now, signaling pre-breakout conditions. And we still have time until year's end. But there are always outperformers, of course, but usually only over very short periods of time. Meaning, capital rotates down the line to laggards or to other solid major projects. I mean, money seeks home, money seeks yield opportunities. So if that opportunity is gone under current conditions in a certain project or asset, investors or traders will typically then rotate to other projects that have that potential not yet played out. So it depends also on one's risk profile, investment strategy. It also depends on any chosen time horizon. Essentially, this is a very subjective selection, and it differs from investor to investor. But one should keep in mind that there are also the opportunity costs, of allocating capital to assets that just won't move much. So, with millions, literally millions of alternative opportunities, meaning coins and tokens together, some of them will just go nowhere. It's just how it is.
Now, looking at the institutional flow patterns, what's your outlook for Ethereum specifically through Q4?
Overall, this current week's institutional flows, I think, will likely influence Bitcoin's short-term momentum, meaning, up, down, or sideways. And Ethereum also stands to benefit from further capital inflows. But you'd have to be mindful of what, Big Daddy does. So, and it could put Ethereum, thus could put, I would say, better performance percentage-wise. Especially once staking ETH ETFs hit the markets, which I expect very soon, personally. In case of ETF approvals for other altcoin majors that are also coming anytime soon, I expect that said assets to perform very, very well in Q4.
Now, speaking of ETF approvals, there has been a massive US regulatory shift. Yes. Can you break that down for us?
Yes, I can try. The SEC introduced generic or standardized listing rules, which removes the need for individual asset or individual token ETF applications, which are, I think, limited to a processing time of 270 days, which is almost a year.
Okay.
So it changed, the SEC changed the rules for crypto ETFs, for crypto ETF applications and approvals in general, processing time. And this is significantly simplified right now, meaning the changed new rules, generic rules, significantly simplify and shorten the approval process. This was announced just as the government shutdown was about to come into effect last week, during the time when SEC final deadline was coming up for Litecoin, which is, I think, 2nd of October. So other final deadlines were also set for Solana, Ripple, Dogecoin, and Cardano for October. I think all of them were in the first 2 weeks of October as a final deadline where the SEC has to give yes or no answer. The SEC essentially said, withdraw any ETF applications under old rules because we have now new rules in place. So new rules have already resulted in over 50 crypto ETF applications for various digital assets over the past 7 to 8 days, which means the number of crypto ETFs I think it's safe to say is going to skyrocket. And I think especially in the next year, I think we're going to have at least 100 ETFs approved.
That's a significant infrastructural change. So are there any other structural changes that are worth noting now?
Yes, I think at least one mention worthy is concerning the announcement of the SME, which is a Chicago Mercantile Exchange, the world's leading derivatives market, the SME exchange, offering futures and options trading for traditional finance, but also for crypto assets. They announced that they're going to introduce 24/7 trading beginning in early 2026. 24/7 markets, meaning open markets around the clock, are a characteristic of crypto industry, of crypto assets and the DeFi. So, this further increases the institutional exposure to the digital assets industry beyond traditional office hours. So it's a very big change where traditional finance, let's say, behemoths, giant players are adopting and changing to some characteristics of crypto industry. Another mention-worthy news or development, I would say maybe what happened in the United Kingdom. United Kingdom is lifting its retail ban on crypto ETNs, which are exchange-traded notes. And this is happening on October 8th, which means they are reopening access to Bitcoin-linked financial products for the first time since 2021. It's a big deal. So this means open access for more investors that are seeking exposure to Bitcoin and hopefully soon other digital assets in the United Kingdom. And this just adds to the bullish Q4 narrative going into year's end.
So as you already mentioned, the US government shutdown happened.
Yes.
Are there any other key macro incidents, I would say, that happened?
Developments. Yeah. There are quite a few developments globally. I mean, the shutdown means that I think 700,000 federal employees are working without immediate pay. And some key economic data is not being published, such as, jobs reports. Until the government shutdown ends, there will be no labor data on employment development in the United States, which is one of key economic data points. This comes at a time when deficit spending in the United States is running about $2 trillion per year. So interestingly, Trump recently announced that he wants to introduce $2,000 stimulus checks, similarly to what U.S. residents or citizens had in I think 2021 COVID era. So and Trump calls it a dividend for the people, funded by tariff revenue. I mean, this economic, maybe fiscal stimulus comes into high inflation and further rising inflation. But, U.S. Congress has to approve that or must approve that first. So that's what he wants to introduce. This proposal by Trump's administration comes at a time when the U.S. government was shut down due to, let me check my notes, lack of funding for government operations.
So we should also touch on what's happening in Japan. There have been some political developments. So what exactly happened there?
Yeah, some very interesting, I would say also important developments. Sanae Takaichi, I hope I pronounced that correctly, won her party's elections over the weekend. She's a pro-business politician. She's positioning to possibly become the Japan's next and very first female prime minister, which is a big change, I would say, in a local political landscape. She stands for big government spending and a loose monetary policy as a means or as a main approach to stimulate the Japanese economy. So some investors welcomed her win, and the Japanese stock market jumped. This also has to do with announced or planned subsidies for certain industry segments for certain companies, which is in a way, let's say, free money. So her stimulus approach can bring benefits, of course, but while also sparking higher inflation and likely higher national debt. Japanese 30-year bond yield surged to an all-time high, 3.3%, if I'm not mistaken. So this higher yield reflects actually higher perceived risk for lending money to Japanese government. So any investor, if this investor sees, let's say, if a investor sees a higher risk before lending money, he or she would ask in return higher yields. So market is reflecting that when it comes to 30-year bond duration yields. And this has to do with the fact that Japanese economy already owns 240% of its GDP, meaning their GDP is much lower than they currently own. So they are Japanese government is the highest indebted government amongst advanced economies. Which is, of course, with now planned or announced even greater fiscal spending, a risk you should pay attention to. So fiscal credibility of Japan is, I would say, becoming one of the market's biggest questions right now. And the Japanese yen hit a record low against euro. And further dropped against the United States dollar. Bitcoin Japanese yen is also at all-time highs, similarly to Bitcoin USD.
This all ties back to what you mentioned about currencies breaking down.
Yes, exactly. I mean, I think last week JP Morgan analysts published a report calling this the debasement trade. And they see it anchored in increased geopolitical and policy uncertainty, long-term inflation, sticky inflation, government deficits, broader diversification away from the United States dollar. So the United States dollar has lost 40% of its purchasing power since the year 2000, and is, I would say, on track to have 2025 as its worst year since 1973. Year to date, US dollar is, I think, down over 11%. 11% roughly. At some point in time over the past few months, it was almost 13%. Now it recovered a little bit, around 10.5, 11% loss, devaluation since start of this year. Maybe to mention you just for comparison, I spoke about Japanese 30-year bond yields. U.S. 30-year bond yields are currently at 4.77%, which is very near the highest level, which is around 5%. That is since December 2007. And this 5% mark was already broken through a couple of times this year. So via U.S. bonds, 30-year bonds are very close to this. And we have to mention that the market still expects 2 more rate cuts by the U.S. Fed before year's end, which I would say would add pressure to this and push bond yields toward this 5% mark.
Yeah. Now, given all of this, so multiple all-time highs, we have currency debasement, regulatory changes. What's your investment outlook for the year end?
All assets are likely to further melt up into year's end and possibly early 2026. Holding only USD cash right now is, I would say, the worst strategy for asset management. Gold and Bitcoin are top performing assets in 2025, which is unprecedented for any calendar year so far. So Bitcoin's role as a safe haven, combined with this bullish October and Q4 seasonality, statistically based, with strong ETF flows and the upcoming explosion of crypto ETF products, together creates a very favorable setup going into year's end.
Yeah. Do you have any specific levels or catalysts investors should look out for?
Catalysts, this week we have scheduled. I have to emphasize scheduled key macro data events for the United States. I think this week there's New York Fed inflation expectations data, Fed meeting minutes. Fed Chair Powell, I think, is also giving a speech, maybe on Thursday, if I'm not mistaken. There is also consumer sentiment data coming out on Thursday or Friday. September jobs report would be, I think, on Friday if the government shutdown ends. But all these scheduled data, scheduled dates for publication of said data remains, I would say, under question mark. All these data remains limited because of the U.S. government shutdown. And these events could or would probably influence short-term momentum. So beyond that, I would watch institutional flows for this week. I think institutional capital flows are the driving force right now. When it comes to price levels for Bitcoin specifically, anything up to 121,000, I don't see as a problem at all. Even 118, if it holds, is not a reason for any concerns. But if should Bitcoin lose 118,000 as a price level, I would consider rebalancing for the short term. But as I mentioned earlier, this also is very subjective, depends on your profile, investment profile, risk profile, time horizon, portfolio in general. Yep. So those are some key points that I would pay attention to for this week.
Okay. Now, do you have any final thoughts for investors who are navigating these extraordinary times?
I think we are witnessing structural macroeconomic changes. The traditional safe havens and risk assets are all moving together, which tells you that something fundamental is shifting in how markets view fiat currencies. Since November 2022, gold tripled. In this year alone, it is up over, I think, 50 or 52%. So historically, when gold price is more than double in its currency in a year's time, it signaled that the economic and political order are highly unstable. And gold is rising against all fiat currencies worldwide, showing global loss of confidence in the fiat monetary system. Current situation means we could be at a turning point in modern financial history. I find it very strange that so few are talking about this. There is no public discourse on this subject. Instead, we have silence. Bitcoin is at 2.5 trillion market cap, and compared to gold's almost some roughly 27 trillion, it still has room to grow. The infrastructure is maturing with 24/7 trading coming up, as I mentioned, with generic ETF rules, simplifying access, expediting access, and with global capital flows generally accelerating. So my 140 to 150K price range as a target for Bitcoin remains intact with strong conviction, I would say, for this quarter until year's end.
Okay. So excellent insights, Igor. As always, thank you for breaking these complex dynamics down for us. Thank you guys for watching. We'll see you guys next time in the next episode of Crypto Insights.
Thank you, Philipp, for inviting me. Thank you guys for watching. See you next time.